Wednesday, December 11th, quick one-up video for you wonderful ladies and gentlemen. Markets had another big rally today, although the breath was rather flattish again. Even negative on the NYSE, with the NASDAQ only being 1.54 to 1 positive. Yesterday, the internals were very slightly negative. The day before, very slightly positive. So it really is a rally in a narrow amount of stocks and, of course, in index futures. A lot of funds, when they put on long, short the futures or index ETFs as hedges. And as that performance lag continues into the end of the year, they want to take off the hedges so that they can boost their performance. So it becomes a virtuous cycle in that sense, where higher prices lead to higher prices and more covering. As far as the VIX goes, we had a little bit of a pullback in the markets today, but VIX closed on the dead lows pretty much. I've said before, I think if we're playing for year-end rally, I'd like to put on some protection here because it's super cheap. Yeah, there might just be the melt up into the end of the year, but you never know, things do happen. As far as VIX goes, though, we would need to get at least over the 20 MA at 1452 to get any move to the upside sustainably going, and then we'd probably make it up somewhere into the 1936 level if there is a bit of an IV pop. 17s to 19s where we'd be interested to start selling out of the money premium, and then of course if we got closer to the 21s to 23s, which has been range high. Down here on pure directional play, meaning buying calls, buying call spreads, buying puts, or buying put spreads. As far as futures go, we saw a pretty big pump up in both the ES and the Qs. The Qs in particular negated the head and shoulders that we had seen, and anything that remains over 21,706 quarter to 21,695, which of course would repair today's rich close, I think is still bullish for still higher prices. Below there, I think we'd probably pull back to the 200 MA 30-minute, wherever that is at the time. As of this video at 1:56 a.m., it's 21,554. With regard to the ES, we got back up over our fulcrum pivot of 60.76, and we got up to the key 21,000-ish level today. We got over a little bit, I think we were 2 points or so over. I think that the bulls now at the very least need to get up over and stay up over the 6,100. Anything below there to me sells sideways to liquidation break. Above, I think, can challenge and make new highs. With regard to SPY, pretty bullish day. We didn't make a new all-time high today, but we are over the 2 times range at 604.35, which of course keeps the yellow channel high and the 2.618 in play at 615.82. I think if we were to lose low of day here at 605.50 and then 10 MA at 604.60, we'd see a liquidation break probably to somewhere between 600 and 598.93, of course that being the 1111 breakout and the 20 MA on the downside. As far as Qs go, they have now taken the lead. We always love to see when Qs are leading SPY and when SMH is leading Qs. We don't quite have SMH leading Qs, but we do have Qs leading SPY, so it's good enough. I think Qs are okay now that they're over the 2 times range at 525.30. If we were to make it to the green channel high, you're looking at 540.10. I think if we get back below the 526.72 to 525.30 area, we probably pull back to the 515.58, which was the 1111 breakout, of course the apples to apples, or a pullback to the 20 MA at 512.12. The good news for the bulls is the 50 MA now is coming up very close into that 500 range. So if you want to do some kind of a spread, maybe buy 525, sell 500 with an overwrite down closer to 485s. Apple today, new all-time high, although it did have a little bit of a topping tail candle. I had said I thought we'd see some sellers at the 250 level. The next big upside targets would be the 255.27 and 261.10. If there is a pullback, we probably would see the 10 MA at 242.44, and my guess is a check back to the breakout at that 237 quarter to 237.49, and the 20 MA will likely line up at the time it gets there, currently 235.72 and rising. I do think that that would be a right or right out by the dip because it's just a check back to the breakout. And we were expecting a little selling here up at 250. I don't know that we're going to get the check back to the breakout right away, but it is possible. I'd feel better over the high of day here at 250.80. I'd still be trimming into 250s if we do get an opening pop, by the way, because options can pin there. Google, oh boy, we've been bullish on Google. We were looking for a move back up to the 182s, which was channel high, and I said I thought eventually we'd get back up to the 191s. I didn't know that we were going to do it in 2 days. I was thinking it might be a couple of weeks into the end of the year, but we're at 195.61. It looks to me like they're going to make a run closer to the 200s. Anything over 191.75 remains bullish. Back below could see liquidation break. They have this new quantum computing going, so my guess is they're going to play a little catch up with the AI trade. I had said I thought we saw that inverted head and shoulders, and that does seem to be playing out in that way. If we were to do a 2 times range of the inverted head and shoulders, we'd be looking at a move up to 191.11, which we've already blown through, and the 2.618 is 204.67, so that does make a little bit of sense to me there. With regard to NVIDIA, this did get a little bit of poppage today. I think a lot of people thought it was going to take a dump. I wasn't one of them. I thought it would be probably sideways to lower or higher. I think the bulls, though, have their work still cut out for them. They need to get over the 140.76, which was the 620 old high, and the 144.42, which was the reference high on 10/22, and we've been using that range as the key pass-don't-pass range for bullish or bearish. We're still below it, so it's a little iffy, but until the bears can really crack and get below 132.11, I'm not really convinced that they have their hearts in the fight. Tesla has also been a big-time bullish trade. We've been bullish on that as well. We talked about booking some profits at 403.20. There was a prompt pullback, but we said we thought it could continue still higher. We're now very close to the channel high, though, at 428s, 429s, depending on how long it takes to get there. And the 2.618 is up at 484.90. Are they going to make the run to 500? It wouldn't surprise me on some kind of blow-off move. I think pullbacks, as long as they hold the, let's just say 400 level, are fine. Below there, to me, gets a little bit more bearish. We've seen some of the real cream come off the top with things like AAPL, which saw a pretty big pullback, but still holding the 20 MA here. We did have a close below at the prior session. So I think if you're long now, you could use candle body low from today's range as a stop. I think anything below 327.33 would be a stop there. If we continue to pump back up, the 10 MA at 352.85 is probably a good area to trim gains into. We are still technically one time framing to the downside because we are still making lower lows and we haven't taken out a prior day's high. Could we do that tomorrow? It'd be very easy. I mean, if we got over the 339.17, I do think we would see that pop to the 10 MA, and then we'd see we are technically below the channel. I thought we could see a pullback to the 288.25, which was really a breakout zone and also the 2 times range, but so far that hasn't happened just yet. Bitcoin, we got the 100K, we saw the pullback, but it is still staying pretty bullish, and we're back up over the 100K. Doesn't surprise me. We held channel low on the pullback. We've been holding the 20 MA, which is now the key MA, currently 96,561 and rising. I think you could raise stops here if you want to use 99,605, which was the 2 times range, or the 10 MA at 99,052. I generally think, again, like 6,100 in the ES, Bitcoin needs to stay over the 100,000. If it does, we can make a move up to the yellow channel high. If it were to do full Monty tomorrow, you'd be looking at 106,569. If we do the 2.618 in some kind of a blow-off move, it's 115,129. Gold finally getting a little bit of love and playing some catch-up here. The head and shoulders is kind of negated here. We're over the 250.39 right shoulder. I think that we could make a move back up to the green channel high and fill in the 11.5 gap to 253.40, and then we'd see. I'd only really start getting bearish on this if we started sinking back below and staying below the 50 MA at 246.62. TLT rates are going up a little. Maybe that's why the big tech names have been strong. The TLT did have a breakout. We are now down to the key MA. I had said I thought we could see a pullback to the 20 MA because that was resistance. It now better be support. Currently 92.14. If that fails, we could come back down to the 91.47 and start getting in danger of filling the gap. So if the bond bulls are going to really get their butts in gear, it really needs to happen here. And I am even seeing rates up a little bit in the after hours, which isn't so positive for this trade. I think a lot of people are probably worried about what's going to happen with the Fed because the last time when the Fed cut rates, interest rates just went straight up after that. Also, we were expecting the Fed to potentially cut rates and then signal a pause. And if they do that, that probably caps the gains for upward movement in bonds and maybe puts a floor under yields. As far as the dollar goes, this has still been pretty strong. We're seeing some devaluation in the Chinese currencies, the yuan. I think you could use the 106.218 at 10 MA as a stop there. Anything below there to me gets a little bit more bearish. But we are riding the underside of the old channel, and we are into some resistance here. I'd use the opportunity to trim some gains. I'm not convinced the dollar rally isn't over and that we couldn't see 110 maybe early next year or maybe even by the summer. Usually the dollar and the euro trade paint. One is up big one year and then it reverses the next year. It's just something I've noticed year after year. And usually if you want to plan trips to Europe, you want to do it when the dollar is strong. Some other cream like Reddit also is still acting fairly well. Anything over the 156.80 to 158.49 to me is still bullish. It's still trading within this megaphone pattern. It's probably only a real short below the 20 MA at 145.25 and rising. If you want to use the 10 MA, I'm good with that, but we have seen moves below the 10 MA and then back up through it that have been bullish. We haven't been below the 20 MA since my bar mitzvah. So I think you could use that as the key pass, don't pass MA at the moment. It is still technically one time framing to the downside, and I would use this opportunity to trim some gains, but still looks fine to me. After the bell, Adobe got smacked up, which is taking down futures a little bit. It's currently 496.25 by 497.50. It had closed the day at 549, so that's a pretty big smackdown. I do see some support. If we were able to get down closer to 485, that's a gap fill there from 11.6. That could offer up some support. My guess is there might be some pinning close to this 500. I would feel better with Adobe if it was able to get back up over and stay up over the initial bounce high at 510.47, but my guess is that area is going to wind up being some resistance. And if they were able to get it up to the initial dump low at 517.46, there are probably sellers who come in there. Adobe doesn't look so great here. It's had a pattern of these kind of run-ups into earnings and then smackdowns. And then the smackdowns usually rally initially, but then they ultimately go lower. So it's usually like smackdown and then 2 or 3 days of rally and then still lower prices. We've also seen it where there's smackdown plus 3 days down and then rally. I don't think Adobe is just going to be a complete collapse, but there are better plays in my view than Adobe at the moment. It'll probably take down Microsoft a little bit because that's also software for service, but very different obviously. Microsoft is into some potential resistance here at 450.64, which is the 78.6 of the range. Pullbacks to 436.73 to 430.82 are still fine. Below there gets a little bit too much for me, and I wouldn't be looking to buy the dips. Generally speaking, we are up quite a bit. Markets are still looking fairly bullish here. The Qs did take out that head and shoulders. As long as that pattern remains above the head and shoulders, there could be a blow-off move here. I am a little concerned that we saw reversals in things like Apple toward the end of the day, but it was up like 9 days straight, so a little bit of profit taking at 250, which was a big major target, is to be expected. Google is boss, making new highs. It's going to be very hard to take down the tape with these big cap tech names that are heavily weighted in the NASDAQ and the Qs, continuing now to make new highs. Like and follow for more.